for the stock market, this is kind of the beginning of the end. And then you also look at things like the VIX, right? The VIX continues to be at recent lows. In fact, it's starting to uptick a little bit here, which is telling me big money is starting to buy protection on the stocks, right? On the market overall, because they see that there could be a price to perfection scenario here. And if one thing gets derailed, then we could see a bigger fall in the markets.
Gareth Soloway joins us today. He is the president of Verified Investing. And we'll be talking about the inflation report and his outlook on the market. CPI came in a little bit stronger than expected today. We'll talk about that. The Dow fell 300 points. The NASDAQ is also slightly down. Bitcoin fell almost 4% from its highs of above $121,000 a coin to now back to $116,000. So Gareth, welcome back to the show. Pretty volatile day. Thanks for being here.
Oh, thanks, David. Great to be here. And yeah, there's some action in this market. Finally, some economic news. We got some earnings coming out. Earnings season now is starting. And this is where, for me as a trader, where I go long and short multiple times, we really can live in this environment and do well.
All right, we'll talk about earnings as well. Let's start with the inflation report. So let's flip over on my screen. CNBC here today has a good overview. Inflation picks up again in June, rising 2.7% annually. You know, it's interesting how every single mainstream media source that I've been reading this morning leads with Trump's tariffs began to slowly work their way through the U.S. economy. Okay, I mean, I'll let you evaluate as the trader. Is it because of Trump's tariffs that we got 2.7%?
I'm not sure about that. I'm not sure if we're seeing the impact. Now, I do believe that tariffs do cause a certain amount of inflation. Whether it's transitory or not, we're going to find out. But in this report, we had the main CPI data for year over year coming in slightly hotter than expected. But if you remove food and energy, the core, it actually was better than expected. And so again, you know, really the tariffs should be impacting everything, not just food and energy. And so I argue that maybe the impacts aren't quite yet being felt here. Now, I will say this is inflation is still relatively muted, even though it's upticking a little bit. And I do wonder if that gives Trump maybe a little bit more leniency to impose these tariffs that he's threatening. We know he likes to kick the can down the road, but he said, hey, Canada 35%, Mexico 30%, Europe 30%. And while everyone's expecting him to kind of back off on that and say, oh, we'll kick the can down again, I do wonder if the fact that the markets are at all-time highs and that we're not seeing more inflation, does that give him a runway to actually impose some of these? Maybe the market's not factoring that in.
So you're saying it was really just a merely matter of time before prices would have ticked up anyway? Gareth?
Yeah, I do think that the tariffs will have an impact. I mean, especially in all fairness, it's not just tariffs, right? You have the deportations going on. You have farms in this country that literally have no one to pick the crops, and they're going to have to pay a lot more to get Americans to come and pick those crops or automate it, which they're not at that point yet. So that again is inflationary on the food system. So it's just a matter of time, but I would argue that today's inflation report didn't really scream Trump's tariffs are having an impact yet.
Right. And we have to be cognizant of the fact that on a monthly basis, core inflation was up in line with expectations. So both core, which is excluding food and energy, and headline numbers went up. So core is now at 2.9% and headlines at 2.7. If you take a look over here at what the consensus actually was, Gareth, you'll see that the median forecast for the monthly gain was 0.3%, which is exactly what happened. So, you know, I stated that markets were kind of surprised because they moved, but in reality, the consensus estimates were reached exactly. Now, I wonder what the consensus expectation of the FOMC members were. And I think that's what people, investors and traders alike, are curious to know, what the Fed's next move is going to be. So I think maybe, in my mind, the first thing I had in mind was maybe Powell's taking a victory lap today. Maybe his wait and see data dependency strategy is paying off. What do you think?
Yeah, I think to some extent, this emboldens the Federal Reserve. Obviously, the Federal Reserve has sustained a ton of attacks from the administration. But I think Powell, in terms of wait and see, I mean, again, inflation upticking on the year over year, in line on the month over month, it just basically tells us to wait a little bit longer. And especially with the jobs data, I mean, listen, we're definitely seeing some weakness in the labor market, but it's in the underbelly, right? So for instance, the last jobs report was solid. Even the revisions were not that bad, but the participation rate is starting to come down, which tells you people are dropping out of the workforce because they cannot find work. So yes, the jobs numbers are solid enough for the Fed to kind of sit on the sidelines at this point.
Okay, Gareth, let's talk about your outlook for inflation at this point. 2.7% headline. What can we expect going forward? Is this the beginning of a revival of higher inflation? This is the first time in many months that inflation has been higher. Keep in mind that it started from 3.0% in January all the way down to 2.4. So it was a pretty big jump in 1 month.
Yeah. And what I would say is I would expect inflation to continue to creep higher, not just because of Trump's tariffs. There's other factors here. We talked about the deportations having an impact as well. But also, I would just point out is that one of the biggest drivers about a year ago of inflation was the stock market. And the stock market was at all-time highs. We had the big correction in March into April. We're now back at all-time highs. So the wealth effect, people are feeling that again. They're feeling well. They look at their 401ks up 25% since April. That's a huge move. That makes people want to go out and spend on goods, for instance, new TVs, etc. And so I think that that can also play a role here. So I think a combination of all those things that I mentioned, you will see inflation continue to hold up. Again, I don't expect a massive spike unless new high tariffs of 30% go into play, but is it going to stay stubbornly around 3% inflation? I actually do think so, and that makes it very tough for the Federal Reserve to cut rates substantially. I think a mercy cut, absolutely. They'll do it by the end of the year, at least one, but we don't just want one, right? The markets are craving, 100 basis points. Heck, Trump wants 300 basis points. We're not going to be able to do that because it would then kickstart a higher inflation. The other thing I'll point out, I want to share my chart if that's okay with you.
Yeah, please.
This is a chart of the 10-year yield. This is concerning, folks. The 10-year yield, even after the somewhat muted inflation numbers, is now pushing up pretty substantially. We're nearing 4.5% again, and that's troublesome. Now, you do have resistance around 4.55, downsloping trend line. That should be a level where it's going to meet resistance. But if yields continue on the long end to push up, that makes borrowing costs higher and a lot of other factors. It also makes the distinguishing factor of investing in stocks versus bonds to be a harder one as you get a bigger yield on bonds over time here.
Before we continue, let me tell you about protecting your most important asset, your personal information. Now, your personal information is likely out there on dozens of data broker sites you've never even heard of. These sites collect and sell your name, address, phone number, and more without your permission. That's why I use today's sponsor, Delete Me. It's a service that finds your personal data across the internet and gets it removed. And it doesn't just do it once, it does it continuously and monitors it and removes it throughout the year. All you have to do is submit your information, and within a week, you get a privacy report showing where your data was found and what's been removed. The whole process is simple, and it runs in the background so you don't have to think about it. Go to joindeleteme.com/DavidLin and use the promo code DavidLin at checkout, or scan the QR code here on screen to get 20% off on all U.S. plans. Join Delete Me now and take control of your privacy today.
Is there a way to directly trade higher inflation? Or do you have to use instruments that you think will benefit when inflation goes up?
Yeah, I think the higher inflation trade would probably be to short the market overall. I mean, if you really believe that we're going to see over 3% inflation, what does it mean? It means the Fed, even if we go into a slowdown, it's more stagflationary, and the Fed can't lower rates as much, which again, the markets would react in a negative way to. So I think at these levels, that would be the play. Otherwise, you could buy the 10-year. If you think inflation's going to really develop, you could also potentially short the dollar overall.
So the 10-year yield then going up. Another interesting factor is the fact that the 2-year may go down if the Fed cuts rates. So then what we're looking at is a steepening of the yield curve if the longer end of the curve continues to go up. As a trader, when you look at the yield curve steepening, what do you do?
Yeah, as a trader, I start to get a little concerned, right? Because there's a divergence in essentially what is paid out on the U.S. debt. So 10, 20, 30 years, the bond yields are starting to go higher. The twos lower are going to go lower with the Fed. And remember, people, the Fed controls the short end. They don't control the long end. Who controls the long end? The market. So what I see is if the long end starts to go up further, let's say we get to 5% on the 10-year, that tells me that in parties like governments around the world that are used to buying the US debt, they're demanding a higher interest rate. They don't believe in the financial structure of the US like they did. The dominance of the US dollar is at risk. De-dollarization is slowly, and I stress this because everyone freaks out that de-dollarization is something that's going to happen overnight. No, it's 10 or 20 years. But again, starting that process, it is starting, it looks like to me, as again, the foundational trust in the US system with the US debt is starting to erode. So these are all things that can drive the long bonds higher. The shorter end, usually, again, the Fed will control, and they will do their best to kind of control it for sure.
Okay, let's get to markets now for Bitcoin and the stock market. So everybody want to know what you're thinking about this recent move to new all-time highs. Last week, or actually, yeah, earlier last week, history was made as stocks and Bitcoin both rose to new all-time highs. That high continued to be pushed earlier this week, with Bitcoin extending to over 121,000. So let's take a look at Bitcoin first, actually, if you don't mind. And now today, as I mentioned earlier, it's down about 4%, 3.8%, back down 116. All right, so I'll let you evaluate the technicals. And, we did see all risk assets pull back a little bit, but Bitcoin a little bit more than stocks. So is this finally a resistance level that won't be breached again, or is this just a temporary pullback and we're off the races to maybe 130, 140, 150? What do you think?
Yeah, so listen, again, I love Bitcoin long term, but yesterday we put in what's called a topping tail. A topping tail is where you get a big surge up early in the day. By the end of the day, the sellers have dominated and they've basically annihilated the buyers and pushed price all the way back in. You can see I annotated this on my chart here, calling it a topping tail. So in technical analysis, if you go to a textbook showing technical analysis, this is what we call a reversal bearish indicator. And sure enough, today, notice Bitcoin actually having a substantial fall. So that's the first thing that just has me as a technical trader on alert here that we did get a daily topping tail. The number two thing is we have to go to our weekly chart and start looking at a longer term trend line that I've been following. In fact, I think the last time we talked, this was a trend line that I was looking at. And basically what we do here is we connect all of our highs from the 2017 bull market, first high of 2021, second high of 2021, and then the 2024 highs into early 2025. Now we breached that line, but as of now, it looks like we're trying to get back below it. You do not want to see Bitcoin have a weekly close back below basically 116,000. That would be a failed breakout, and sometimes the biggest moves come from failed breakouts or breakdowns. In this case, that would be a big move to the downside. So I love the bullishness out there, but also it can be a warning signal when you get the cacophony of insanity where people are calling for 250,000 by year end or even a million. Be aware, I always just look at the charts. The charts give me probability, and right now you've now turned from a bullish move on Bitcoin to now favoring bearish side action.
Okay, Gareth. Bearish side action to what level? Let's talk about key support and resistance levels.
Yep. So the first one, and this isn't very far down. So listen, let's be fair about that. This would be your first level of support, and the reason it is a support level, it's this high pivot to this high pivot and right across, right? So you have a very obvious resistance, 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 resistance breakout. And so on a pullback, the 109 to 108,000 level, that is going to be your first big level. If you get through that, then we start talking about a bigger trend line here that you really need to hold. And this would, again, so you technically could buy at the 108, 109 level if you really believe in this. You could even buy up to about 86,000 right here, this beautiful upsloping trend line from 2023 through 2024 into early 2025. If this one breaks, that's where you would start to be concerned. As long as you hold above this longer term trend, you could say, okay, Bitcoin is holding its longer term 2023 trend. It's still in a bull trend. It's still in an uptrend. If this breaks, that's where trouble starts. But right now, again, 108 to 109,000, that would be your first expected pullback to support.
That's not a huge pullback. That's an average Tuesday for Bitcoin.
That's true. That's true. And
so
that's the beauty of it, right? Is, I mean, if you're a bull, then you're like, who cares? It's just a pullback. Now, my only caution would be is that you just want to see whether or not this trend line here, this trend line going back to 2017, it just wouldn't be healthy, right? We look at something being healthy when it breaks out. It should hold the breakout. It should have the strength to hold the breakout. If it can't, it just makes you pause a little bit. But you're right. The pullback to 108, 109,000 is just your run of the mill 1 or 2 day pullback in Bitcoin.
What if a trader were to look at what happened today and say, hey, well, yesterday was the real kind of trend. Today was just a knee-jerk reaction to some CPI data. Basically, people were just selling the news. I really need to buy today's 4% dip. And because I believe in the medium-term trend above 120,000. So what would you say to that?
Yeah, I think again, it depends on your philosophy. If you're a trader like me, then you don't buy topping tails, right? Topping tails are something you would look to short into until it fails, which occurs on any daily close above the topping tail high, about 123,250. But if you're a longer term investor, I mean, if you're like me, I do believe eventually it goes to 250,000. And so, yeah, I mean, you could be buying on every pullback. Just my only recommendation is don't go all in on a pullback to 118,000. Leave a little bit of room to dollar cost average if it comes down another 510, another 510 after that, so that at least you can kind of work your average down if you get one of these bigger pullbacks in Bitcoin.
It's okay. So overall, then let's finish on Bitcoin. Overall, then, what are you doing with Bitcoin as a trader? You're shorting right now, or are you just waiting?
Yeah, so I'm short. I have IBIT short right now with my members in smart money stocks and ETFs, and then in my crypto service we do have Bitcoin short here. And again, all it is just looking at the chart and saying, okay, what is the chart telling me? Doesn't matter whether I love Bitcoin or not. You guys know I love it, but if it's going to pull back, I want to make money that way, and then I'll flip it into a long when it hits support.
So let's say it goes down to your lower band of 90,000. Was it 90,000?
Yeah,
If that
86, 87,000. Yep, right
86,
there.
87,000. Let's say it touches that lower resistance orange line. What happens then as a trader? Do you start buying then with both hands and feet? Or do you
I
kind
don't know
of,
about both hands and feet, but as a trader, yeah, you come down here, you would assume you would get a bounce, and so I would be a buyer there for a bounce. Now, again,
okay.
I may not look for all-time highs again, and I'll have to reevaluate at that point. But as a shorter-term trader, absolutely, you trust the level until it fails. Now, keep in mind, notice that I say it until it fails, right? If it fails, let's say I buy here at 87. If
Yeah.
it confirms below this line at let's say 85 or 84, I stop myself out and I say, okay, I got to get out of this trade on the long side because it looks like it's going lower. And so the idea is money management here and maneuvering according to the chart.
Let's say that, and this could very well happen, that it starts to consolidate before it goes down to 87, 80, 89. Let's say it just hits 100,000 and it just starts consolidating there and it starts trading sideways. Maybe it has a bit of a bounce and then pull back, bit of a bounce, pull back. What do you do then? Do you
Yeah.
reevaluate that trend line?
You do to some extent. So again, charts are fluid. So a level that you love today, you may not love in a month from now or in even a week from now. One of the things to keep in mind is this type of pattern would be a bear flag, right? So if you pull back and you reverse this recent upside, that's a reversal. You've also closed back below that longer term trend line. Then going sideways creates a classic, what we call in technical analysis, a down move, sideways consolidation. This is what we know as a bear flag that probability wise signals downside. So you would actually say, okay, this is telling me it's going to go lower. You would still look for that level. Now, again, there's a caveat here, and we're getting into some chart analysis in terms of education, but this is great stuff. I think your viewers will really like it. Let's just say we come down and we get close to my buy, but we don't hit my buy. And that happens in real life, real trading. Sometimes it gets close and just doesn't fill you. And then we start consolidating. In this situation, I would not be a buyer because this is now making a bear flag just above my buy level. So again, you don't want to just say, oh, well, if it just downticks here, because a bear flag, when it plays out, it's usually a much bigger move. And so I'd have to, at that point, reevaluate, do I still want to buy at this 87-ish thousand range? And in that situation where that formed, I would step back and I'd say, okay, instead, I'll play it for this move. So here's your next pivot right down here at 76. And obviously we're going a lot lower here. Who knows if it gets this low? But as a trader, always remember that you want to reevaluate the chart because it could change on a daily basis. Every day we get a new candle, which is a new price action, and the thesis or probabilities can adjust. Just like if you watch World Series of Poker, they show us on the cards on the screen, and it has like a percentage win rate next to it. And then a card gets turned over and it changes. The same thing happens in technical analysis. You always want to reevaluate because the odds could be changing in real time.
Let's talk about the broader crypto market now. It's not just Bitcoin reaching all-time highs. Over the last couple of weeks, XRP's up. Let's see here. It's got about, 40% from the last week of June. Ethereum, let's see what ETH has done. Ethereum is up in the same period about 35% from its big bounce in early May. It's up 68%. A bunch of meme coins pumping, a bunch of other alts pumping. What's been going on the last couple of weeks? It just seems like there's been this massive revival of capital and interest back to crypto all of a sudden. And it wasn't just like, slowly. It was all of a sudden.
Yeah, you're right about that. And I think what this is this is what happens at the end of bull market runs. And I'm not saying crypto's at that end yet, but what I'm saying is that the way capital is distributed in stock market, in crypto markets, basically all risk assets, is it focuses in on the safest first. So as you're emerging from a bear market, what works the best? The big cap tech, the dividend players, they start to do better and better. We've obviously seen semiconductors, for instance, do really well. And what we've seen over the last month is small caps are starting to wake up. You have stocks that go up 100, 300, 500% in a day. These penny stocks starting to get crazy. And then money says, okay, I've made money in these risky stocks. Where's the next place to rotate while risk on is in play? And recently, over the last week, that was altcoins. Altcoins began to rip up. We've seen XRP, like you said, go. We've seen Uniswap. We've seen SUI. Like all of these kind of higher risk plays are now running. And that's just the normal cycle that a market goes through with risk assets. So I think that's why you're seeing crypto run here. It's usually towards the end cycle. The reason I say it's the end cycle is that what's riskier than altcoins? What's riskier than Bonk or Doge or Fartcoin, right? I mean, these crazy meme coins that are going up 100%. What's riskier than that? And that if that's the end game, that's the last thing to run before the market's correct.
This kind of reminds me of gold in the mining stocks, but we'll talk about gold in just a bit. Gold's been running up all year, and the mining stocks have been beating gold. Silver has also been outperforming. Similar kind of pattern we're seeing with Bitcoin and the alts, the Bitcoin being the leader of the crypto space, moving up first, and then everything else moving up later. So it's just quite interesting. So you're looking at this as kind of, a bear signal. Have the drivers?
Yeah. For the stock market, this is kind of the beginning of the end. And again, it doesn't mean that Ethereum can't go up to 4,000 before it's done. I mean, that would just be another move from this low to here. We just need a replication of that on Ethereum all the way right up to here. But it's telling me that we're getting close to the end. And then you also look at things like the VIX, right? The VIX continues to be at recent lows. In fact, it's starting to uptick a little bit here, which is telling me big money is starting to buy protection on the stocks, right? On market overall, because they see that there could be a price to perfection scenario here. And if one thing gets derailed, then we could see a bigger fall in the markets.
All right, let's take a look at why you think this is going to be the end or beginning of the end for stock markets here. So let's pull up the S&P 500. We haven't taken a look at that yet.
Mm-hmm. Yeah, so
here's the S&P.
Here's the S&P, right? And so number one, I've been doing a lot of charting. You can see these three trend lines. These three trend lines connecting major pivots here, major little pivot right there to this high, and then these lows. And these are all, notice how price right here came into the three trend lines, basically what we would call X marks the spot, where they all meet, and it got rejected. And then look at how, yes, we've gone up, but then we pull back, and then we gapped up today, and the S&P is now negative on the day. And by the way, the S&P being negative in spite of Nvidia's news that they can now sell the AI chips to China, and Nvidia's up 5% today. So that, to me, when you start seeing good news and the stock market is not pushing up, not only is the technical lines right above current price, but now we're starting to see the fundamental positives not have as big an impact on the market. And that's, again, a signal that we could be ready to break down. I say ready because we could go sideways for another week or two. But one thing, I'll show you guys what I'm looking for. You want to know when the market starts to free fall a little bit? Take the low from April. So this is the April 7th low. Connect it to your lowest point here and drag it up. Look at that trend line right there. So if this line breaks, this is your uptrend line from April. So from the lows when the S&P was down about 20%, this is your uptrend line. If we violate and close below this, you'll see algorithms and institutional money start to most likely sell into any buyers of retail. And so really right now we haven't broken that yet. So markets are safe for now. But look, we're right on that line right now. So keep an eye on that level. On the S&P, that's right around 62.65. So 62.65, a close below that would be problematic.
Do you think Bitcoin leads stocks, or is it the other way around? Have you noticed a consistent pattern there?
Yeah, I mean, it used to be in 2017 and 2021 that it was a leader, meaning that Bitcoin would top out in 2021, for instance, it topped out in November. The S&P didn't top out for another 4 to 6 weeks, and we also saw that in previous cycles. This cycle, we just don't know because Bitcoin hasn't been around long enough with enough bull market tops to really be sure, but certainly historically it has led and been a signal of a top.
Well, let's take the top from the last bull rally up until the collapse. Well, not collapse, the pullback in April. So as you can see, yeah, from that chart here, February was when it peaked, and then we had a major pullback, a bit of a consolidating pattern, and then that's when Liberation Day struck. And
Right.
then on April 9th, that's when the tariffs were taken back, except China, and then we had a V-shaped recovery afterward. I wonder, and then now we're at new all-time highs, which is significant because it's the first time since the beginning of the year that the markets have reached a new all-time high this past week. So let's just compare this high to February's high. Any technical similarities? In other words, can we draw any conclusions as to whether or not we could see another pullback by the order of 20%?
Yeah, so that's a great question. And right now, aside from the levels on the charts, I don't have anything that mirrors this. But what I do think is interesting is that number
Hmm.
one, sentiment. Sentiment is something that I follow very closely. For instance, when I look at comments on videos I do where I talk about a bearish signal, right, a topping tail on Bitcoin, and when I see people getting so riled up, like, oh my gosh, like I can't believe he's even daring to be telling us that there might be a signal that's not bullish here. That actually is an amazing indicator. It's actually one of the best indicators I have that we are close to a top. And what that's basically saying is that people have over leveraged themselves on the long side, whether it's the stock market or the crypto markets. And whenever people over leverage and they get all in, that's when the markets tend to top because they have no more leverage to give. They're kind of tapped out on the financial side. And so little things like that I start paying attention to on the sentiment side and the psychology side. And then needless to say, just looking at the chart of the S&P, this is very clear that we've had a massive run. There's also negative divergences developing on the RSI. And again, we're getting into resistance lines, multiple resistance lines, and also trying to break a support line.
Earnings season starting. What are your expectations, Gareth?
Yeah, so earnings season, I think that earnings are going to be very solid, but the problem is, and we're seeing this today with JP Morgan, is that you have good earnings, but the problem is these stocks are trading at levels that can't be sustained. Essentially, profit takers are coming in. So JP Morgan and most of the financials reported good earnings, very good earnings. In fact, most of them, if not all, beat. The stocks are mostly down. For instance, a BlackRock, if we look at BlackRock, BlackRock blew away estimates, right? They beat estimates by a mile, revenue by a mile. The stock is down 5.5% because look at the run this thing's had. This is one of the biggest financial firms out there, the one that controls most things. It was up 44% going into from the April lows of last quarter to this move. And so you're just getting the natural people saying, wow, they didn't cure cancer. They didn't, pull a rabbit out of a hat. Yes, they beat earnings, but we're going to still take some profits up here due to risk and overvaluation. And I think that's going to be the theme for earnings is that as long as these stocks stay up near their all-time highs, generally, I think they're going to do great on earnings, but the stocks will still pull back a little bit.
Okay. Again, similar question for Bitcoin similar question for stocks as we asked for Bitcoin. What are the resistance levels that you're expecting for stocks such that if it breaches below that level or touches below that level, you're definitely shorting for good?
Yeah, so I'm already short on the market, but the big level here on the S&P is this trend line right here, which we're now touching today but have not broken. Again, a break below that would be, I think, where we start to see at least a 5 to 10% correction on the markets, which would honestly take us back to, let's see where that would go. What would a 10% from the highs take us back to here? Yeah, so somewhere right in this vicinity, you can see this high pivot here, this low, and then this gap fill. So somewhere on the S&P back to about 5,700, I would expect that to be kind of your run-of-the-mill retrace after such a mammoth move. And then if we look at the NASDAQ, we can take a look at the NASDAQ composite. If we look at this chart, by the way, just something to point out here. This is something I showed in our last interview. But again, notice the parallel and look at what we're hammering on the upside here. So here's your COVID low to the bear market low. And all I did here was use a simple tool called a parallel. It's one of the most powerful things in technical analysis, but something that everyone watching can use. Connect major lows, extend it up. Lo and behold, you get your exact bull market high from 2021 connected to the bull market high of 2024. And look at what we're right up into now. Now, just using pure logic, no emotion, but pure logic, what do we think happens here? If the last time we hit that, we got this move, the last time we hit that, we got this move. Whether or not it's that big of a move, we don't know, but could we at least expect a pullback off of that upper line? The answer is yes. And then just going to a more close-knit, daily chart, flipping back to the more near term, the same trend line exists that we're watching on the S&P. You can see it's right here. The only difference is look at how the NASDAQ is above that line. It's not hitting the line today because of NVIDIA and the semis, so it still hasn't touched it. It touched it here, but it's back up. That break right there should be the cascade effect where we see that bigger correction to the downside.
Yeah, let's move over now to gold and silver. Actually, let me show my screen now, if you allow me to do so. I just want to show you one quick thing here. So this is gold, purple line, then silver, 16.81% is the year-to-date, no, actually 3-month performance. And I brought this chart up because if you look at the year-to-date performance, they look kind of similar, but if you just zoom into the last 3 months, what happened was silver started outperforming gold and stayed outperforming. And so gold's been trailing sideways, if not slightly down, and then silver's just been ripping higher. When you see that kind of performance, do you think to yourself silver is a new bull play, or is it kind of the same story where a lagging metal catches up, outperforms, and this is the beginning of the end? Same story as the altcoins catching up to Bitcoin.
I think that's the greatest analogy ever. I look at Ethereum and I say, essentially, Ethereum is the silver, gold is the Bitcoin, right? Bitcoin is gold. The same sort of thing. You have the catch-up trade. So gold has zoomed up so much in the near term that essentially, eventually, investors say, yeah, I don't really want to pay 3,500 on gold. But look at silver. It's not even at its multi-year high yet. Now it's had a big move up. And I want to show this chart here because this is pretty cool stuff when we go to this chart on silver, because silver, again, had a beautiful breakout. So let me walk you guys through this chart. Notice this trend line right here. So we were hovering on silver right in this 34.5 level. High pivot, hit it here, pulled back. Hit it here. Look at how we consolidated and then broke out. And then you got this beautiful bull flag, sideways consolidation above the breakout line. That tells you it's going to go higher. It zoomed higher, but look at where it stopped on a dime. A long-term trend line. This is why we just talked about the NASDAQ, that upper parallel line. Same thing. The power of these lines are incredible. It rejected it. Look at how it rejected it here, 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 here. So in theory or in logic, what would we expect right here? Rejection. And that's what's happening. So short term, it hit its upside target. Not to say that over the mid to long term, it's not going higher. I actually do think eventually it will. But just common sense dictates you should get a pullback here of consolidation on silver, and that's what it's doing.
Are you more bullish on silver right now or gold?
It's a good question. I think gold right now. So silver's had its run just since May, basically early June. We've gone from about $32 and change to 39, and all while gold, and I'll flip over to my gold chart here, gold has just been consolidating, right? So a lot of sideways consolidation. I still think there's risk on gold for a pullback to about 3,050 or 3,000, but this again, this up move, this is your flagpole, your bull move. This inside parallel is a bullish pattern of consolidation. Even if it comes down here, I'd be buying gold on any pullbacks here for a longer move. And let's be fair, we all know what the government's doing. A new spending bill passed, going to add $4 trillion at minimum to the debt. We already are at 37 trillion. Just like Bitcoin longer term, I don't know how you don't like the idea of something other than fiat currencies as a store of value.
What about the mining stocks? So the GDX and GDXJ have grossly outperformed gold this year. This was the exact opposite last year when we were talking about this. And I know you're stance on the S&P 500 overall. But if you're still slightly bullish on gold, are you then still slightly bullish on the mining stocks, even though many of them have already run up a lot, like by the order of more than 50% year to date?
Yeah, so like gold, I'm just waiting for the pullback to buy the miners. And you can see here this upsloping trend line. Notice we're starting to break down. That probably tells us we're going to be in for a little bit more weakness in the near term. But having said that, this trend line to this low, two low major pivots, I would start accumulating around $48 to $47 on the miners. I do think they go higher with gold. It's just a matter of short-term break point on a trend line here, which tells me the odds favor a move to the downside, and I'll just be waiting at the next support to be starting to accumulate them.
Okay. Very interesting. All right. Finally, let's take a look at the DXY. Yeah.
Yeah. So
Just
this is a really interesting chart, David, because notice what's happening here. We were in this downtrend. You can see this high matching with these subsequent highs. We've now burst above that. So the dollar is starting to gain a little traction here. And also notice interest rates are also going up. So again, the question is, why are people rushing in to buy the US dollar, but also interest rates are going up as well? I mean, a little bit of an interesting action point here. But the point being is the dollar short term now, again, as long as it holds above this line, favors the upside. And again, that should be respected until proven otherwise. Upside target, I'll give you guys my upside target. See this last major low right here, kind of right in this same level. So I'd be looking for the dollar to get back to about 100 on the DXY. And then once we get in there, that'll be the first test of major resistance. But I think right now we're probably going back to 100 on the DXY.
All right, well, let's finish off on a quick lightning round on what you think will be the levels for each of these assets we talked about. So I'll just give you two possibilities, and obviously nobody knows for sure. We can just evaluate the probabilities and see which one is more likely. So just on gold, which is more likely by the end of the year, 4,000 on gold or a pullback to below 3,000?
I'm going to say 4,000. I do think we'll pull back close to 3,000, but if I have to say by year end, I think gold is closer to 4,000. I think instability. I think, again, eventually the economy will continue to weaken slowly, but it'll weaken. And I think that pushes more people into gold.
All right, let's assume Bitcoin's at 120,000. Let's just round up to 120K today. So what's more likely by the end of the year? 150? So that's 30K on the upside, or 30K on the downside, which is 90.
90. I think 90. And I think that's solely on that I love Bitcoin longer term and do think it's going to 150. But I do think also if we get in a heavy sell-off in the markets, which looks like we're close to, then I would be looking for a risk off in Bitcoin near term and a pullback into the 90s, maybe even that 87, 80, 88 level we were just talking about on the chart. And then I would just, again, start to accumulate at that point.
All right, S&P's at 6,200 today. So 7,000 on the S&P by the end of the year, or let's say 58,000 or 5,800.
5,800. Yeah, definitely based on what I'm seeing in the charts. Doesn't mean we can't get close to 7,000, but we'd have to fight through a lot of these big resistance levels at this point. And right now, again, it looks like the market's ignoring some of this good news with NVIDIA, some good news. CPI was reasonable. It wasn't great, but it wasn't horrendous. And the markets, again, are flattish on the day.
Well, let's follow up next time, Gareth. Good talk as always. Where can we learn more from you and Verified Investing?
Yeah, sure, absolutely. Just check us out at Verified Investing. It's all charts all the time, which is all probabilities, right? So no narratives, no hype, no nonsense. It is what it is on the charts, and we trade accordingly, which at least we can put odds in our favor. No matter the hype, no matter the FOMO, odds in our favor, which is all we can ask. Thank you.
Okay. All right. Check out Verified Investing. Link down below, and follow Gareth on the social media links down below as well. I appreciate it, Gareth. It's always good to see you. So thanks for being here. See you next time.
Take care.
Thank you for watching. Don't forget to like and subscribe.